You see AMD's earnings report come out, and everyone's talking about whether it's good or bad news. The stock moves up or down. Analysts throw around terms like beat expectations or revenue growth acceleration, but here's the thing, most people never actually look at the real numbers filed with the SEC. They're not wrong to care about earnings, they're just missing the most important part. I'm going to walk you through AMD's latest quarterly report exactly as it was filed with the SEC, no analyst spin, no media interpretation, just the raw numbers and what they actually mean for the business. I've spent years translating corporate financial jargon into plain English because here's what I've learned, the companies that understand their own numbers are the ones that compound wealth over time. Today we're looking at Advanced Micro Devices' most recent quarter that ended March 28. This is straight from their official SEC filing, reported with the usual lag that all public companies have. But what jumped out at me wasn't just the headline revenue number, it was the pattern hiding in the 5-quarter trend. Let's start with revenue. That's simply the total amount of money AMD brought in from selling their products and services this quarter. They reported $10 billion, which represents a 38% increase compared to the same quarter last year. Now, 38% growth sounds impressive, but here's what most people miss. You have to look at the trend over time to see if growth is actually accelerating or if the company is starting to slow down. When I look at AMD's revenue over the past 5 quarters, I see a clear story emerging. They went from $6 billion to $7 billion, then $7 billion, jumped to $9 billion, and now $10 billion. That's not just growth, that's acceleration, especially in these last 2 quarters. But revenue is only half the story. The question that really matters is whether they're actually making money on all those sales. This is where we separate the companies that just generate sales from the ones that actually build wealth. Net income, that's the profit left over after AMD pays for everything, manufacturing costs, employee salaries, research and development, taxes, everything. AMD reported $1 billion in net income this quarter. To put that in perspective, that means for every dollar of revenue they brought in, they kept about 13 cents as profit. That's actually a pretty healthy margin for a technology hardware company. What I find interesting is that this isn't a company just burning cash to grow revenue, they're generating substantial profits while growing at nearly 40% year over year. But here's the number that individual investors really need to understand, because it's what actually determines the value of each share you might own. Earnings per share, or EPS, is simply that $1 billion profit divided by the number of shares outstanding. It tells you how much profit each individual share of AMD earned. This quarter, each share earned $0. Think of it this way, if you owned 100 shares of AMD, your portion of the company's quarterly profit would be $84. This is the number that ultimately drives stock prices over time, because it represents the actual earning power behind each share. Now, at the current stock price of $539, investors are paying about 160 times the quarterly earnings for each share, or about 40 times if you annualize that quarterly number. Whether that's expensive or reasonable depends on whether AMD can maintain this growth trajectory. And that brings me to the most important question every investor should be asking right now. When I look at those 5 quarters of revenue, $6 billion, $7 billion, $7 billion, $9 billion, $10 billion, I see a company that hit an inflection point. The first 3 quarters show steady but modest growth, then something changed in the last 2 quarters with those bigger jumps. The question for investors is whether this represents a sustainable new growth rate or if AMD just had a particularly strong couple of quarters due to temporary factors. The beauty of looking at the actual filed numbers is that you can see the business momentum without the noise of daily stock price movements or analyst opinions. What matters is whether the underlying business can continue generating this level of profit growth. But there's one more thing every investor needs to consider before making any decisions about AMD. Over the past month, AMD's stock has risen 3% to that current price of $539. That's relatively modest movement for a stock that just reported strong earnings growth. Sometimes the market takes time to digest earnings results, and sometimes the current price already reflects expectations for continued growth. What I can tell you is that the business fundamentals, revenue growth, profitability, and earnings per share, all point in a positive direction based on this latest filing. But here's what I always remind people: earnings reports are backward-looking. They tell you what happened last quarter, not necessarily what will happen next quarter. The real skill in investing is using this historical data to make informed judgments about future potential, while always acknowledging the uncertainty involved. So here's what AMD's latest SEC filing actually tells us: they're growing revenue at an accelerating pace, maintaining healthy profit margins, and generating substantial earnings per share. The 5-quarter trend shows clear business momentum, and they're doing this while staying profitable. That's not always easy in the semiconductor industry. What should you watch for next quarter? I'd look for whether they can maintain this revenue growth rate and keep those profit margins stable. Remember, this is educational analysis, not financial advice. Always do your own research and consider your personal financial situation. For more detailed breakdowns of earnings reports and what they actually mean, check out nexusaicalls.com, where we translate the numbers that matter most.